Want to know the 5 real estate investment strategies that experts swear by in 2025? These aren't the old school methods that just don't work anymore. These are the game changers that could actually build your wealth this year. Stick around to find out how you can avoid common mistakes and get ahead in this competitive market. Real estate has always been a solid way to build wealth, but not all strategies are created equal. In 2025, the market is constantly shifting. What worked last year might not be as effective this year. If you're ready to make your next move in real estate, you need to know what's actually working now, and more importantly, what could leave you with a property that drains your money instead of growing your portfolio. Today I'm breaking down the top 5 real estate investment strategies that are making waves in 2025. Whether you're looking to buy your first rental property, flip houses, or get into commercial real estate, these strategies will give you the edge you need. Let's dive right in and figure out which ones can really help you build long-term wealth. First up, the classic buying rental properties and holding them for the long haul. This strategy has been a staple for decades and it's still very much alive today. The idea here is simple. You buy a property, rent it out, and use the rental income to cover your mortgage and other expenses. Over time, the property appreciates, and you're left with a profitable asset. In today's market, the demand for rental properties is skyrocketing. With more people renting than ever before, especially in urban areas, you're looking at a steady stream of tenants. If you pick the right property in a growing area, your cash flow will keep increasing as rents rise. While buy and hold is still a solid strategy, you need to choose your properties carefully. Location is key, and it's important to buy in an area that's growing and has strong rental demand. Otherwise, you might find yourself stuck with a property that doesn't bring in enough money. Look for neighborhoods that are in the early stages of gentrification or close to major development projects. These areas can offer big returns down the road, and your property values will likely increase over time. House hacking is an innovative way to jump into real estate investing with less capital, and it's especially great for newbies. This strategy involves buying a multifamily property, like a duplex or triplex, living in one unit and renting out the others. The rental income from the other units helps cover your mortgage, meaning you essentially live for free or at a reduced cost. As home prices continue to rise, house hacking allows you to get into real estate without needing a huge down payment or dealing with all of the expenses of owning a single-family home. Plus, multifamily properties are always in demand since they provide affordable housing options. Managing tenants can be tricky, especially if you're living in the same building. You'll need to set clear boundaries and manage your property effectively to keep things running smoothly. If you don't want to be a full-time landlord, you may want to hire a property management company to handle things for you. Start with a property that has a separate entrance for each unit to ensure privacy. It's also worth considering properties in areas near universities or major employers, as these tend to attract renters who are looking for affordable housing. Flipping houses isn't for the faint of heart, but when done correctly, it can be incredibly rewarding. This strategy involves buying undervalued properties, renovating them, and then selling them for a profit. The goal is to buy low, add value, and sell high. In today's market, there are plenty of homes in need of renovation, especially in neighborhoods that are starting to gentrify. If you can spot these diamonds in the rough, flipping can yield huge profits. The risk with flipping is that you need to have a good sense of the market and be able to manage the renovation process effectively. Renovations can go over budget or take longer than expected, eating into your potential profits. Plus, the market can fluctuate, and you might get stuck with a property if it doesn't sell quickly. Start by looking for properties that need cosmetic fixes rather than major structural work. This will help keep your renovation costs down and make it easier to turn a profit. Always budget for unexpected expenses. Trust me, they will happen. Commercial real estate is an area that many people overlook, but it's one that's offering unique opportunities in 2025. With the rise of remote work and the transformation of retail, there's a shift in demand for different types of commercial spaces, from office buildings to warehouses and even mixed-use spaces. The pandemic has completely reshaped the way businesses use space. While traditional office buildings may be seeing less demand, there's growing interest in industrial properties. Think warehouses or distribution centers, as e-commerce continues to boom. Additionally, mixed-use spaces that combine residential, retail, and office spaces are becoming more popular. Commercial real estate is often more expensive up front, and it can require a more specialized understanding of the market. You'll need to know what types of businesses are growing in your area and what kind of spaces they need. But if you get it right, the returns can be substantial. Look for emerging markets or cities that are attracting new businesses. These areas will likely see growth in commercial real estate as companies expand their footprints. If you want to invest in real estate but don't want to deal with the hassles of property management, REITs could be your best option. A REIT is a company that owns or finances real estate properties, and by investing in them, you can get exposure to the real estate market without owning physical properties yourself. REITs are great for investors looking for diversification without the high upfront costs. They allow you to invest in different types of properties, like shopping centers, office buildings, or even hotels, all through a single investment. Plus, they often pay out dividends, making them an attractive option for passive income. While REITs can offer good returns, they're also subject to market fluctuations. You won't have the same control over your investment as you would with physical properties, and their performance can be affected by the broader economy or shifts in the real estate market. Focus on specialized REITs that invest in properties with strong growth potential. And as always, make sure to research the company's track record and portfolio before investing. So which of these strategies should you choose? Well, the answer depends on your goals, budget, and level of experience. But if you really want to set yourself up for success in 2025, it's about finding the right strategy that fits your risk tolerance and time commitment. Whether you're looking for passive income or high returns from flipping, there's something here that can work for you. Real estate investing isn't a one-size-fits-all approach. From buy and hold rental properties to flipping houses or even diving into commercial real estate and REITs, there are multiple ways to build long-term wealth. The key is understanding what works best in today's market and applying it in a way that aligns with your financial goals. If you can find the right strategy and avoid common pitfalls, you'll be well on your way to success in real estate investing this year. Want insider real estate investing tips? Subscribe now and grab the game-changing info in the description.